What's up guys, it's your finance boy PV Rajan and welcome back to my channel where we talk about real estate, personal finance and entrepreneurship. So I get this question a lot. What's better? Should I lease a car? Should I buy it? And which one's a better move financially? So I've done both. I've leased cars, I've owned cars, but is one decision better than the other? Is one a smarter financial decision? Is one cheaper than the other? Stay tuned and find out. So first, let's talk about buying the car. You can pretty much buy whatever car you want, whether it's brand new, whether it's used 10 years, 5 years, etc. Assuming you're not going to be paying all cash for the car, you're going to need to finance the car. So what this means is you're going to put a down payment towards the purchase price of the car, and you're going to get a loan for the remaining amount owing, and that's what is called financing the car. So that car loan is going to have a specified interest rate and it's going to have a specified term. So the term of the loan can range anywhere between 24 months, 36 months, 48 months, even 72 months. And within that period, you're going to be making monthly payments that consist of a principal portion and an interest portion. And as you make those payments, your loan amount is going to go down until you complete the loan and you own the car free and clear. Additionally, when you buy a car and you're purchasing it outright, you're going to have your purchase price plus the sales tax on the car. So that's usually pretty expensive depending on where you live. So for me in Ontario, 13% sales tax, huge hit. If you live in California, there's a steep sales tax as well. So depending on what state or what province or where you are in the world, sales tax is another thing you have to consider when buying the car, as it's going to affect your purchase price. Now, if you've bought the car, you own it in cash, and now it's time to sell the car, you're going to get net proceeds of whatever the car is going to be worth. However, if the car is financed and you still have an outstanding loan on the car, your net proceeds is going to be whatever you sell the car for minus the loan outstanding and other administrative costs. That's what you're going to be left with in your pocket. So if you sell the car for a price that's less than the loan amount, you're going to have to actually kick up cash and settle that loan when the car is sold. So keep that in mind. Now, here's the primary drawbacks when it comes to owning a car. You're going to be responsible for all of the maintenance. So the oil changes as well as big repairs, suddenly a gasket blows, things of that nature that happen to the car, you're going to have to shell out cash and make sure you get the car repaired so you can continue using it for its intended purpose. The other drawback is paying the sales tax. Like I mentioned, it can be significantly expensive, and that's going to be a drastic increase in your overall cash outflow. And the final thing to consider is if you're financing the car, you're going to have higher monthly payments because your payment is going to consist of principal and interest. So the principal is going to be the money that goes towards the loan and reducing the loan amount that you owe, whereas the interest is going to go directly to the lender in this case, which is the dealership, for the interest you owe them on that car loan. So now let's talk about leasing. Leasing generally works best if you're someone who wants to be constantly switching their car out every few years and like having a new car. If you're someone who wants to buy a car and drive it for the next 5 years, the next 10 years, and really keep it long term, I don't recommend leasing for you. If you're finding value in this video, if you haven't already, hit that subscribe button because I'm going to hit you with some more details. So if you're like me and you like having a new car every few years, every 2 years you want to switch your car, every 3 years you want to switch your car, then leasing may be a better option for you. Also, if it's going to help your business, for example, if you're a real estate agent or a lawyer or an accountant or someone who has to present themselves to clients and as a part of their brand image want to have a nice car and continuously be switching it, that's a good option for you as well. Firstly, when it comes to a lease, there's going to be a fixed term for which you're making payments. Typically here, lease terms can be 24 months, 36 months, 48 months, and sometimes even the 72-month leases. So for the fixed lease term, you're going to be making a monthly lease payment every month. The other thing you have to consider with leases is that you're going to have an allotted amount of mileage which you can drive over the term of the lease or on an annual basis. So for example, let's say you sign a 24-month lease over which you can drive 40,000 miles or kilometers. That means per year you can put on 20,000 kilometers or miles onto the vehicle, so you're restricted. If you were to go over or drive in excess of that 40,000, you would then have to pay a per kilometer or per mile fee in addition to your lease costs. Typically in Canada, you see around 55 cents per kilometer, and in the States, it's 20 to 25 cents per mile. That will be an additional cost if you drive it over the allotted mileage. So based on that 55 cents per kilometer here in Canada, if you were to drive an extra 5,000 kilometers, that would be an extra $2,750, which you would have to pay to the dealership at the end of the lease. So if you're someone who drives a lot and puts on a ton of kilometers on their car every year and you don't want restrictions when it comes to how much you can drive, buying may be a more better option for you. If you're someone who potentially drives Uber or are in a profession where it's required for your vehicle to have a ton of mileage put onto it, again, buying may be a better option for you. So let's get into the reasons why leasing can be less expensive than buying the car. Firstly, you're only going to be paying sales tax on the lease payment amounts versus the entire purchase price of the car. That's going to be a huge difference depending on what state you're in or what province you live in. So for example, if you have a lease which is $1,000 per month, you're only going to be paying 13% HST on that $1,000 lease payment on a monthly basis, versus if you had purchased a $70,000 car, you're paying 13% on $70,000 in one shot. Secondly, your monthly lease price is essentially determined by how much the car is going to depreciate over the term of the lease. So for example, let's say you were going to pick up a brand new BMW, which is $100,000, and you were going to lease it for a 2-year period. If you were to drive 40,000 kilometers over that 2-year period, they estimate that the depreciation effect that that's going to have on that car is going to be approximately $30,000 in cost. The dealership is going to charge you the equivalent of $30,000 over 2 years via lease payments. Plus, they're going to add some additional fees in there and administrative costs in order to make more money off of that lease. But that's essentially how a lease works. You're paying for the depreciation that you're putting onto that vehicle. As a result of this, since you're paying for that depreciation, your lease payments are going to be much lower than what the finance payments are going to be for a car that you purchased. You're only strictly paying for depreciation versus when you bought the car, you're paying down your loan as well as interest costs on that loan. So if you're like me and you want to do some better cash flow planning, you have lower cash outflow coming from a lease versus if you purchased the car. Okay, number 3. Maintenance costs. So make sure you get a lease where maintenance is included in the lease. This is going to save you a lot of money, as those maintenance costs very quickly add up and can become a significant amount. If you're buying the car, you're going to be responsible for the maintenance costs and paying for oil changes, paying for repairs, and a lot of these costs. Now, especially with luxury cars like BMWs, Mercedes, Audis, where the parts have to come in from Germany and there's import taxes and all kinds of other costs, the price can get very expensive. So if you're leasing a luxury car and the maintenance is covered in your lease, this is huge savings for you. Finally, at the end of the lease, you don't have to worry about the hassle of selling the car. You don't have to deal with these Craigslist tire kickers, the Kijiji tire kickers. Don't have to dance that dance. You just hand the keys into the dealership, make sure the car's in good condition, and you're off into the sunset. However, at the end of the lease, you have nothing to show for it, and that's one of the biggest drawbacks. You've paid X amount of dollars every single month for 2 years, for 3 years, for 4 years, and now you have nothing to show for it. So that's the biggest drawback. You weren't making payments towards an asset or something that's going to have residual value. That money's kind of just gone. Now let's talk about residual value. So what residual value is, essentially, is the cost at which the car is going to be worth at the end of the lease. So let's go back to the example I talked about earlier. At the beginning of your lease, the vehicle that you had taken was a $100,000 BMW. Now, at the end of your lease, it's going to have a residual value of $60,000 after all of that depreciation and kilometers that you had put on that vehicle. And now your dealership is willing to sell it to you at that residual value, which is going to be $60,000. That's essentially the price you can take the car for at the end of the lease. In best case scenario, you're going to be walking into a situation where the residual value is going to be less than what the current fair market value is for that vehicle. So in this scenario, for example, let's say for that exact model that you have, if you were to go onto the open market and purchase that car, it's actually valued at $70,000 and you would have to pay 70 grand for it. You now have the option to purchase it from your dealership at the residual value of $60,000. So you're buying into $10,000 in equity. However, this is not always going to be the case. There's often going to be cases where the residual value is much higher than what the current fair market value is. And in those cases, you want to turn the car back into the dealership. And if you do want to buy that vehicle, you can go out into the open market and purchase it yourself. So, which one is better for you? This really comes down to your personal situation. If you're someone who wants to constantly be switching their cars and driving the latest models every 2 to 3 years, leasing is what is going to be making more sense for you. Don't be that person that goes ahead and buys a brand new car, spends all of that money, and after 5 years sells it at a significantly depreciated value and then goes and buys another one and does the same thing again. That's going to cost you so much more money. You're going to be way more out of pocket than if you had just paid the lease payments over that same term. Also, if you're someone who wants to better manage their cash flow on a monthly basis, the lease payment is going to be the smaller and cheaper cash outflow for you. You'll know exactly what the payment is, make sure your maintenance is fixed into the lease, and you know exactly what that car is going to cost you on a monthly basis, and it's going to be less than if you were financing a purchase. In my personal situation right now, I prefer to lease vehicles. A, because I love switching cars, so every 2 to 3 years I want to be getting a new vehicle and having the latest gadgets and enjoying a nice new ride. But more importantly, I want to manage my cash flow, have a lower monthly cash outflow, and I use my vehicle for business purposes. So therefore, I'm able to write off a majority of my lease as a business expense. So my lease payments are going to be an expense in nature. It's a monthly reoccurring expense, and therefore I can write it off for business as long as I'm using the vehicle for business purposes. So this is huge for me versus if I had just purchased the car, it's not considered an expense. It's a one-time purchase of an asset. So you can't just write off the entire value of the car. What you can do is claim depreciation for a portion of the car slowly on an annual basis, but unlike the lease, you can't write off the majority of the payment. So in my personal situation, as an avid, experienced investor, I would rather minimize the cash outflow going towards the vehicle by using a lease and taking the extra cash and reinvesting it into real estate or stocks or something that's going to generate me more revenue. So for example, if I were to be someone who purchased a car in cold hard cash, that's a chunk of money that's just gone and not generating revenue for me, and it's a depreciating asset. Versus I could have taken that same money and invested it in real estate and made more. On the flip end, if I were to finance that car and only put the down payment down, and now I'm making higher monthly payments of principal and interest, again, if I'd went the lease route, it would have been a smaller monthly payment, and that excess cash flow I could have invested into real estate and made more money, plus I get the write-off of the lease for business purposes. There are actually situations in which it makes more sense for you to buy the car versus lease the car, especially if you're buying a car that really holds its value well. So for example, you purchased a vehicle for $40,000. You put 20,000 kilometers on it in 1 year, and at the end of the year, it's worth $35,000. If you were to flip that car right now, you'd get 35 grand. If you do the math, it actually only costed you $5,000 to own that car, or $416 per month. So you flip it, you get your 35K back, and you've only out of pocket $5,000. Whereas if you were to have leased that exact same car, it would have costed you $650 a month, which is a higher cash outflow. So the scenarios like this with specific models and specific cars that hold their value better and don't depreciate as rapidly as the cost that you're going to be paying for the lease. Also, if you're buying specialty cars or very rare cars, that's a whole different story. There's cars out there that hold their exact value that you purchased it for, even though you're putting on kilometers, or they're even appreciating in value and you're actually building equity into those vehicles. So if it's something of that nature, it makes way more sense to buy than to lease. If it's a rare model or an exotic model, limited edition, you could actually potentially make money on those types of cars. So in summary, if you are someone who likes to constantly switch cars and are going to be putting on a lot of kilometers on your vehicle and using it for business purposes, I would recommend going with the lease. If you're someone that is going to hold on to a particular model for a long duration of time, doesn't want to deal with selling the vehicle at the end, and is not primarily using it for business purposes, I would purchase the car. So if you guys got value out of that video, make sure you guys smash that like button. And if you already haven't, subscribe to my channel. Here's my social media as well. I post different kind of content there daily, so be sure to check it out. And until next time, see you guys.